learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming in at April 24th, 2020, and the stock market is going to go crazy. I know I was feeling nostalgic. I had to say that, but I think it's true. Today was a very, very wild day with a lot of implications, and then even after hours with earnings, we saw Intel. We have a crazy play, $300,000 to $30,000. We'll go over that play, and we'll see it tomorrow. That will even be a potential play in the morning. However, what happened here in the market was very, very important today. So I'm going to go over that really quickly because that's the main point. Then I'm going to go over the keys. Then I have the plays that we made today and some of the other stocks that I'm looking out for tomorrow. The first and main thing, though, and this is why I'm saying the stock market could be crazy tomorrow off this, again, that Friday, and if we close red or not, and with all the earnings, that will be a very decisive Friday because, again, now people are still going to be anticipating a lot of these bigger companies that were supposed to come up next week. But what happened today was truly unprecedented. It has to do with now Gilead and Remdesivir. So if you remember last week, we talked about it. I don't know if it was last week or the beginning of this week, but we saw that news that Remdesivir was going to a trial, or we saw that info from the Chicago University and that they're researching it more, and then the market jumped. But now that was also the same day we started talking about reopening the economy. Now, this is where it gets important because today, right off the bat, it dropped from Financial Times. We caught it pretty quickly. You could check it out on the live stream. They dropped this report that said Gilead's first study flops. And the thing was, though, it was first accidentally reported through the World Health Organization. That's the culprit of who released it. But now this was the study in China, not the one that was talked about last week. So hang on with me. It gets a little bit more confusing because then they pretty much go back and forth, and then that study wasn't fully enrolled. And this is even the response you got from the Gilead CEO. It was pretty wild throughout the day. But essentially, the main thing, what makes it so surprising is this is a very uncommon, especially the source being, both governmental and just given the situation, to see any sort of medical study released like that without really the company knowing or having a specific time to do it. I mean, it caused the mess, and this is what caused a huge move in the market. And now this is important for a few reasons. I could even get a little tinfoil. I think even the fact that they're even going back and forth with Gilead, I think that's saying something. I actually like Gilead and some of this Remdesivir stuff, but we will see. Again, we've been talking about it. It just solidifies the fact that the whole market is moving like a giant biotech, and the same information there will affect it. So that's pretty much what happened. I have a few more things to talk about it, but that's the main thing. That's why today was crazy, and it's going to really, really impact tomorrow as we get more updates. We see what happens, and then now also Intel earnings, which we'll talk about. But let me not get ahead of myself. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/thestockmarket. You can see the plays live, you could chat, you could be just nice and just get the news quickly. Shout out to Colt, baby. And the most important thing you need to do, post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes, anything, post it below. What are you looking at tomorrow? Did you play the crazy Intel play? You got a different play? Let me know what you looking to play. And it's a Froggy Friday. I'll help you ready. Okay, sorry, I'm getting way too hyped off of this, but as far as the keys, and again, this move was important, but it's this whole Gilead Remdesivir China thing. But now it's showing us something really important. The fact that we even sold off, it showed that the market was pricing in some of that upwards move because of the drug and not just that news that the economy was reopening. I think this is the main part that's giving us an idea, and the fact that it was still kind of able to knock us out of this earnings mode. So the fact that we still only closed down 0.25%, it does kind of show you the effect of earnings. And again, as these companies report, but that is giving us more information about everything that's going on. And like I said, the market is just moving like a giant biostock. You need to now watch, to culminate everything with the market earnings, all of that. You should be watching this back and forth between how oil's moving and the impact that oil is causing, and then even what that's telling you about demand and trade and all that, because it ties in. But now also watch how the market starts to react to oil. Watch how it reacts to these other events. Watch how it's reacting now to the drug stuff. Watch how it reacts to the political news, the economy reopening. Now watch how it reacts to earnings. It's all going to be this push and pull, but it's all going to end up and lead us somewhere, and that's what we need to be watching here. So all in all, watch this virus Remdesivir news. Again, what it's telling us, even after hours now, the market is even making a move. They're having the press conference thing going on, and they're even talking about it. They're saying that they're close to a vaccine, and even Pence said to start re-elective surgeries, and that most of the states have gone through the peak. Said they might extend social distancing till summer, but they're doing like 16 states to reopen. So watch how the market starts to react to certain different types of news. Again, now you're getting both reopening news and the Remdesivir stuff again. So watch out for that. This is going to be important. And the question is now, is it going to be short term, or is this going to be kind of take the hit now, then following earnings seasons, we will see stuff develop. So watch everything else. And then finally now, the final thing to even watch, and even just with the market, Intel earnings. So we made a crazy play. I'm going to go over that. It's not really that crazy when you think about it, but now they had their earnings and it caused a lot of other companies, every single chip maker. It's going to affect that Microsoft play, but watch what they're doing. And I'm just bringing this up now just in general because see the earnings effect, see these, Intel's a big market cap company, see that effect with all the news, but now watch this stuff with earnings and guidance. So the thing with Intel, they dropped and they beat, and this is where I'm kind of getting this idea with now we get a reopening plan, stocks sell off, or stuff with the virus, it's selling off until there's a real solution. Now, if we move past this, it looks like people might just get more worried about the uncertainty, or maybe it's like, oh crap, it's a little bit harder to restart and get things back up because Intel now, they killed it on their earnings. They made a way more profit than the same quarter last year, but now they're pretty much expecting uncertainty without that. So they gave guidance for Q2, and even though they beat, but they removed annual guidance for the year, which what I was talking about yesterday. It's what a lot of companies have been doing, and it's kind of softened the blow. But notice how the earnings is now, you're getting this kind of final pop in a lot of these companies. That's why you haven't seen it. Some companies get hit too hard, but even then, Intel sold off pretty big, but it's like they're going to have decent quarters. Even Snapchat, they did good the first 2 months, and then that last quarter, we still don't have that much on it. So now we need to see that and see as that develops. And now, next thing, even with Intel, let's see if there's any analysts tomorrow, upgrades or downgrades, how that's going to affect the stock. But now the whole just chip makers in general, and then even stuff like Apple and Microsoft, two of the bigger companies that are tied in and related to Intel. Like I said, the market is just a giant bio stock. That's pretty much it. Watch out for that. So let us get into the plays. Right off the bat, it's going to be an Intel continuation. So I think they might have a big move. I think, again, upgrades and downgrades is what I'm going to look for and where they end up at. But I might do a continuation, or I might hold our play, but we did a very low probability trade with Intel. So here's the trade that I did. It's a debit spread, and I bought 100 of the May 1st, the next week's 44.5 puts, and then I sold 100 of the 41s. It's a debit spread, but I spent 3 cents per contract, so I spent $300 a piece. So now here's the order. You can see here, it's pretty far. This was 3 standard deviations out of the money, and we kind of got a little boost there at close. It's like right at the end of 2 standard deviations, but at 3 cents, we buy this, and that was the whole idea. And the thing about this contract this was another market maker type of, not really a glitch, but I saw that, and you should keep an eye on that for debit spreads, is that this contract, when I bought it, was trading at like 4 cents when I got it, but now this contract had a bid of 2 cents. So I was able to sell 100 of these, collect $200, and then that pretty much helped finance this trade, so I didn't spend as much. So you get a capped gain, but that's kind of the good thing here. But so you can see the trade here. I don't know why it's saying 600. It should be 300 because that's how much we spent on it. But pretty much if Intel drops below $44.44, we would make $34,000. So it's not too bad, but it's a very, very low probability trade. So this was now a 1% probability to trade. The fact that Intel is down, 7% when they were pricing in, I think around 4 or 5%. Or I think they were pricing, I think it was a little bit higher on there, but this play, we're going to win a little bit, but it went from like 1% to like maybe like a 12% probability trade. So we have till next week if there's a continuation. So I made this trade and I did $300. So it was a pretty bad trade, lower probability. It could end up working very, very well and it could be profitable. But now why did I play this? I got this because of one, my Grim Reaper theory, what I'm expecting with earnings, and kind of that Remdesivir news was a mini Grim Reaper in a way, but not really because it's more related to individual companies and then the big boys. So Intel is one of those companies, and the example I used from the Grim Reaper was what they did in 2001. They cut their guidance. So we may end up seeing that next quarter, but I thought Intel would kind of be exposed to that. But then if you were on stream, you saw I did two different things. So we had those June calls. They weren't up too much. I was like, well, they have June. They have some time. I might as well hold them. I put $300 in there. So I said, I'll hold the calls on the upside. But I was like, I really didn't expect Intel to move. I was even thinking, well, what if I just sold calls, and if I did a call or a put debit spread, and I did a few of them, they needed the stock to move about $10 on a credit spread, and it would have been risking $200 or $300 to make like $2,000, and it was still like a 10% probability trade, the same probability we're at now. So I figured I would go for something that had a little bit more exposure for the same risk, because I didn't want to really cap it when I was thinking, well, it's a big earnings. And then when we went to the Intel chart, I started comparing Intel to pretty much every other chip maker, like even Micron and AMD, XLNX. I mean, there's a few, but the thing it really paralleled the most was Apple. And you got bad news on Intel this morning on Apple. So I was like, well, I think maybe they would surprise. So that's why I went with that debit spread, but I controlled it. I used the debit spread to get something, decently close to the money. You see that play was, on the very, very edge of the cusp of possible, but not really probable. You see, and we could maybe get close, and that's where I was kind of playing on. But the idea was I wanted to keep it small. So I got to go $300 short term. If there was a big surprise blowout, we would be able to profit off of it. But if it did go up, or if it drops a little bit now and then 2 weeks from now starts ripping back up, we would have those June contracts. So that's why I did that play. It was pretty interesting. And then I did a few different plays today. So I did a bunch of different plays besides that. And I did a lot of small ones. And then I started with the big one in the morning. I did that favorite play of mine yesterday. I got the Microsoft. So I grabbed 50 of the June 230 calls at 33 cents. So you can see here, pretty much same price on the bid, a little bit higher on the ask. They did go up a little bit, but Microsoft came down throughout the day. So they're probably going to get clapped tomorrow because Intel brought down anybody, again, related to it. Microsoft is related. Remember, we bought that as a sympathy. So again, that's why I kind of went for the put play, and I wanted to kind of keep it bigger there and not cap myself with a spread or like a condor like we did on the other earnings. And another reason for that too, actually, before I jump to that point, is, a reason why I didn't want to do the spread, because take a look. Remember, Netflix and Domino's, they all had run-ups coming into earnings. Intel really didn't. It kind of moved a little bit down, but it was really following the market in a way, but it didn't have its little run-up maybe besides this one. So I was like, maybe that means the pricing has, there's a chance for the pricing to be a little bit wrong there. So we got to see that, but I grabbed the Microsoft as the sympathy to that. So again, like I said, that's why we even got puts on the Intel. But I'm going to be holding that play till earnings, and I'm probably going to do the same thing with Intel, where coming into earnings on Microsoft, I'm going to get shorter term puts there and see what we could play with that. Then the next play I got was XLNX. This was for a continuation, and this is what I said yesterday. Someone brought it up, and now this one might help us, but I got May 15th. So I didn't want to go with the weekly. I wanted to keep it a little safe, but it's more of a gambling play. Think those old Boeing plays. That's why I put $100 into it. I got them for 58 cents each. The May 15th, 70 puts, and then I closed the Netflix trade. So you guys see here, close this trade. It's saying bye-bye. What did we do? We sold them both. Oh, no, wait, I bought them back. So I bought them back at 1,600, but then we sold them for like, what, 5,000 or something? So I made like $3,000 or 3,500, but then we're still down 1,600 on the other one. So I walked away with $2,000 profit. And with that one, that was on Netflix, because pretty much if Netflix was at 433 when I did this trade, you see I sold the 440. So that means this put was $7 in the money and had 1 day of time left. But pretty much now, wherever Netflix went above or below 440 by tomorrow, that was going to be the deciding factor. So if Netflix went up, $10-20 tomorrow, I would have been actually losing more of the profit, because then this contract would be worth $460. This would be worth $2,000. And I would have only made $2,500 on this, but then I spent $1,000 on the insurance. So then I would have only been down to like $1,000 or $500 or $1,500 profit or something, like $500 profit. And if it went anything above that, I could completely lose. But without here, I was like $2,000 profit. There's $3,600 on the table. So, or $3,000 on the table. I was like, I might as well just take it. So I ended up closing it, got 55% of the profit, the net on there. So not too bad. And then I did 2 Baidu and Baba plays And both of these did them small, $60 each. These were for next week. I got a 90 put and a 187 5-point. Kind of my tinfoil theory, just in case, because I'm like, if we start getting weird news out of China, China starts playing kind of even weird with Gilead and Remdesivir and the World Health Organization. I still had that old China theory, and I think it may come back. And that's not too old. It's like 2 weeks old. So just don't forget about that. And that's why I was like, I'll get my hand in the cookie jar, some 2 smaller plays. And then don't let me forget, I did make some trades on the other account here. I grabbed some UVXY and SPY calls when all that happened. Oh, and I forgot we got those backs too. So then I also got these today. I got 2 SPY daily calls. I spent 60 something bucks, 272 puts. So it starts at 277. We would profit off a gap down, spent $60 on those. Then I grabbed a UVXY and I missed out on Gilead. I even though we called the news out first, I was going to get a Gilead and I was like, I'll play the index. Should have just got the Gilead put. Those went 1,000%. But then I got the UVXY. Oh, that's a daily. I thought I had till next week. Spent $75. That's a little bit more expensive, but on the 59, but it's a little bit closer. It's at 53. So again, these should go in the money in the morning. And if they are in the money in the morning, I'll probably sell them off pretty quickly because if anything changes, those will get clapped. And then I grabbed $50 in these 190 McDonald's calls. So I did a lot of little smaller YOLOs here, dailies, because again, the market started moving. I said, if this is going to pick up, I want little plays hand in the cookie jar. If that volatility picks up or any sort of Grim Reaper or anything of that nature, the premiums have been pretty much crushed. So I wanted to throw some here and there. And then there was FDA news. So I was like, I'll spend 150 on there. BAX, BAX, they got emergency approval to test something. June 19th, 115 calls. I got filled on those pretty bad, actually. Even though they ended up going up, after I called them out, they dropped to like 20 cents. So I got filled super bad. I hit the ask and then they dropped like 50% almost. It was pretty crazy. So a lot of different decent deals on there, but that one's just time, typical swing trade for all of these. But there's that. And then everything else, I want that Boeing play. I didn't get to do it. You guys see, I'm kind of already positioned for a lot of the activity tomorrow. We got our hand in the cookie jar on, a little bit on the upside. We talked about McDonald's. I want those. Got the UVXY and SPY. We got our hand in the cookie jar on the medicals. If anything, I think Intel has the potential to be a big continuer or mover depending on the news. But one thing I really like is Gilead. And maybe make a weekend thesis on this because I think I'm going to need to finesse this, but I want to bet against China through Gilead essentially. And like I was saying, it's a little tinfoil, but I think the fact that Gilead is even, this is even at contention, the fact, again, this has never happened before, I think it's saying something. And I remember Gilead being talked about very, very early on when all this happened, especially them going to China amongst other things. So I want some of this. I'm thinking either shares or options, or I might even do a crazy selling put strategy. So, and the reason for that is because I think it's going to suffer a little bit more pain here. And it's going to, that's just how the bios are going to move in how this is all going. So I want to take advantage of that volatility and see if we could do some of this arbitrage stuff that we took advantage with SEO. But I like Gilead. I really, really do like Gilead. I just think it's going to be a matter of timing. And I will have to set that up from there. But that's pretty much it. I'm going to be watching as well as Intel and just, again, the rest of the continuation and all the plays. Keep your eye out for any of this biotech stuff. Again, all these earnings, and let's see what the market throws at us and watch the bonds and gold and all that. It's going to be important. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need your helmet on. I need your head in the game, baby. Don't limit yourself. You could do a lot of things as long as you in the game, baby. Don't limit yourself. Just keep shooting on there. And remember, control the budget. You see, I did a lot of those YOLO crazy plays. I was throwing them out there. Good thing I got to save up the last few weeks and not going too crazy. But still, if you get caught up in the hype and the emotions, you could still get clapped. Remember, set the budget, set the earnings. Who's going to come out of this is the people who are disciplined. So you may see a lot of plays. If you don't have the budget for them, you got to pick and choose or say no and focus on spread and events, baby. So take it slow. The code loves you, baby. We got you. Don't force it, baby. You could make the money faster if you took it slow, baby. So I'm going to see you guys in the morning. The code loves you. I love you. Let's go.